Inflation continues to come down, but the markets are not responding favorably. We'll be discussing that and much more today on Money Never Sleeps. Thanks for joining us today, folks. As we get going, hit that like button, subscribe to the channel. Remember that nothing we say is financial advice. Kevin, we're going to keep this one, we're going to get down and dirty today. Keep this one short, concise. We got CPI came in first thing this morning, under expectations, going the direction I thought based off of last month's PPI, which we'll see the updated one tomorrow. But the markets, I knew it was going to be ugly when the reaction was very muted to that number coming in. I mean, I was watching the charts when it came in and nothing, it bounced for a hot second and then it came right back down. So it was very clear that the market, while, this is a good thing long-term, market did not respond favorably in the short term. Could be people rotating into smaller cap stocks like you were talking about before the show started. Could be some people just like, you know what? I'm taking profit. I'm going to move out of this thing. And, we've talked about previously that when the Fed does pivot, we see a market correction, heck, sometimes even a market crash. Maybe some people are front running that. How are you feeling about everything right now based off of today's inflation numbers and how the market's responding?
I think this was a reasonable reaction. I think we got an hour to the close. It'd be interesting to see how it closes out exactly. Pretty much a bearish engulfing candle. It looks like it's trying right now to fight back a little bit, but I'm not surprised one bit. I didn't see the number come out live. I was sleeping like a baby. Just got the alert on my phone from you and House, and then I saw a couple of tweets out there, and I was like, okay. Then I saw the charts. I'm like, it's getting worse. It's getting worse. Next thing I know, I'm looking at it's 56 points down, and it's like, all right, all the gains from yesterday are erased. So the only thing that really kind of in my mind that is making a lot of sense looking at this is that a lot of the institutions that had positions still on some of these, tech stocks rotated out of them and they distributed to retail. The retail were the ones that were buying up for the past few weeks. They put in a pretty fast market sell, price going down, no bids. That's what's probably bringing down the market right now. So I think it's a reasonable reaction. It's also going to be, the implications of this are probably pointing towards a rate cut for sure in September. If not, if we get worse data in the tomorrow for PPI, or maybe even the Fed sees something they don't like, there's a good chance we could get that surprise cut at the meeting at the end of the month. I'm not betting on that, but we're going to see how the market reacts. Right now, I think this is a standard reaction for a market that hasn't corrected by any means for the past year and a half.
Yeah, I think that is a reasonable assessment there. Just kind of go over the numbers. We saw the expectation was for a 0.1% increase on the headline, actually came in under expectation and down 0.1%. Year-over-year number, they were predicting 3.1 and came in at 3 for the core. Expectation was 3.4, came in at 3.3, right around where I had discussed yesterday. So those are the numbers there. If we look ahead to tomorrow, it's the producer price index. And this is more of the forward-looking CPI number or CPI indicator, if you will, that kind of shows us. And it wouldn't surprise me with this move we've seen in oil over the last 30 days, having rebounded. It hit this local low back on June 4th. And it's been a nice recovery for oil from there, up almost 20%. So that wouldn't surprise me if we saw a hot PPI number tomorrow, which I also think the markets would not respond favorably to. So that's that portion of it. We see that crypto is having a decent day overall, I guess you could say.
Holding up
It's
strong.
not getting beat up the way that NASDAQ is. So there is a little bit of a divergence there, even though it hasn't been running the way equities were over recent weeks. But crypto is not doing too bad. Bitcoin is looking pretty strong here. Germany is down to, their last 280 million worth of Bitcoin to sell off. So we'll see when that is completed. Any other thoughts on the data that we saw today? Any Fed speak, things like that?
Yeah, I mean, I think the reaction of the CPI coming in cooler sent a lot of other currencies down, right? That was the thing. The dollar got stronger, and then you saw the yen weaken to 162 to 1. So part of the reason I think that we're seeing a bit of this, the sell off too, is just the yen carry trade that we were talking about. It's been about a year since we brought it up on the show. We talked about the implications that the yen carry trade would cause if they started offloading a lot of that US debt in order to save some of the currency, to save the value of it. It's going to be really dicey here these next few months going into the election, to the end of the year, especially if the banking crisis, intensifies. We're getting a lot of bank earnings this week and next week. But I just want to show the yen right now because this is absolute intervention. It's the S&P right now. To go to the yen right here. Look at that intervention that came in today, right at the CPI. That means that we'll probably find out tonight how much the BOJ spent or sold off in terms of treasuries, U.S. treasuries, that is, to save that currency from that dreaded 122 level. 162 level, which is, this double top that we're kind of looking at right here. Now, the scary thing is we went right down to the 50 moving average. If they decide that, okay, it's getting to a point where rates are coming down significantly in the US, they start cutting rates, there's a good chance that Japan could start raising rates and they could also start making the yen stronger against the dollar. That would completely unwind the trade and that would be complicated even more so for US equities, right? Because then you would see a lot less exposure to the treasury market. And this is another theory that we brought up, in the past 6 months or so, is that we're going to see the equity market crash to save the treasury market. Japan could be the one to, aid in that process. If they continue to sell off U.S. Treasuries, the U.S.
Hold on,
Treasuries.
give me 1 second. You keep going. I'll be right back. Give me 30 seconds here.
Yeah, so the U.S. Treasury market is going to essentially need, buyers in order for the United States government to operate at a functional level. The equity market is where all the money currently is. It's all concentrated in that. So it makes logical sense that if another country starts selling off those treasuries.
Sorry, I'm back. My wife's leaving me, and maybe for good. And I had to say goodbye real quick.
Okay. We'll talk about that after the show, I guess. But then, yeah, so you're going to see all the money that's in the equity market in the US, because all the money is concentrated there, flow out into the US Treasury market, which would probably line up with the rate cuts that we were expecting to see. So everything is kind of moving together, fluidly for the time being. But in that process itself, you're probably going to see major crashes in certain markets. Equity would probably be number one. I'm very scared to see what the Nikkei looks like tonight. That's going to be very interesting to see, because if let me just share the Nikkei real quick, and then we can stop talking about Japan. It was up again. It gapped up an insane amount last night. I mean, it looks like it's red candle. That's just because it closed lower than where it opened. But it was up 392 points last night. Massive gap, and that's on top of pushing all the way up from all these gaps that we've created to the upside since 2020, March of 2020. You guys know what happened there. So there is a huge divergence there. The yen is weak now that they're going to start spending money to save the yen, get rid of US debt. We're asking for a complete unwind in both the two largest economies in the world at that point. So just this is the early phases of it. It's going to get interesting, but that's kind of the play that we've been watching for a long time. And it's just really cool to start seeing it come to fruition.
All right. I'm trying to get my head back in this. Okay. What else? Ace, good to see you, my man.
Up, Ace.
What else do you think is, anything too urgent, noteworthy, actionable right now? I still think we're going to, my prediction is we get a not great PPI number tomorrow, based off of what I discussed with oil, but I could be wrong there. Anything else that you're doing right now? Obviously that's not financial advice, but how are you handling the market as we speak?
I still got my position as I go until next year. I think time wise, I'm doing okay. I was shorted Nvidia a week ago. Bought some ETF called NVD. Just it seemed like Nvidia was starting to trade technically, so I got in on it. I bought some more yesterday as well. I'm just gonna pull up Nvidia real quick too, and then we can kind of talk about a theory, not necessarily a theory, but something that we're starting to see and could complicate the markets going into April. I mean, not April, August. And I know I would
Sorry,
hope
I threw the whole show off.
No, it's all good. But let's pull up NVIDIA right now. And we're looking at this technical trade that I was in, right? This is the dangerous part too. I said that we had 5 waves onto the downside. You can only see it on, say, like the hourly chart. 5 waves there. And then we got 3 waves up, massive. Now what we're putting in is we got our wave 1. We're putting in our wave 2, in my opinion, on the hourly chart. We're going to see this bounce. So what I would expect for Nvidia is, we could go down for the next day or so, to close the week, but maybe we get a bit of a bounce in Nvidia trading, and I expect us to put in a wave 3. So what that would look like on the chart would be something like this. 2, maybe the 2 would be maybe 132, 133 around there for Nvidia if it gets that high. The wave 3 would be pretty massive. It bring us down to about 114 or so, maybe a little bit of a bounce, and then we'd finish off somewhere around here, around 107. And again, this is a corrective pattern. It's part of a larger ABC corrective pattern. So there could be 5 waves in the first A, 3 waves in the B, and then 5 more waves in the C, and that could bring us down to the bear market lows where I anticipate us to go. All that being said, though, for the time being, there's a gap down here between 101 and 96. So if we do overextend in this 5th wave, there's a good chance we could come down here. And then the chart for Nvidia looks very different than it has ever before, right? So it's going to be, everything's been up only. Now that you're kind of forming this, I guess this corrective pattern on the right side, it's a very different chart that we're looking at. I think the momentum is going to be very, very much so to the downside. And what this lines up with is a lot of money that is flowing out of these top tech stocks and flowing into the small caps, right? We're seeing the Russell having a really good day off of this news. If you guys don't remember, in 2008, we did have a period where for like a month or two, small caps just fucking went crazy. And this was right before Lehman Brothers went under. So just keep in mind, it's very possible for these things to happen where you see small caps just start to rally. It's because they're undervalued compared to what was driving the market in terms of concentration. The Dow, I said that there was a good chance that we could see the Dow move up a little bit closer to that 41.5 level, which is up here. It's a historical level. It's if you start seeing a lot of money flow out of the S&P and the NASDAQ, it's very possible to see that. It's a 5% move here. That's not asking for a lot. So we could see that rotation of capital move from one to the next. But at some point, that's going to run out as well. And where we're going to see a lot of this money, it's probably going to flow into the treasury market, like I mentioned earlier. You can see that the yields, everything is down today, which is good if you're bullish on treasuries. One that I am also kind of playing right now is TLT. I've had it for some time. And I bought it roughly around 93, so right around where we are currently. I bought it over here, it went down, but it was in this bull flag, so I was like, yeah, this might be a good idea to buy. And this pretty much means that money will be flowing into the longer term treasuries. And when we see rates go down, I believe in 2020 we saw the rates go down to 0. Let me see if I can find that in the chart. And when the rates were, at 0, we topped out around 179 in a mass panic. Obviously, that was a crash that was last 17 days or so. But you can see that there was a lot of value. So buying down here for me wasn't that big of a, it's more risk, more reward than risk, I felt. And I still think that we're going to see rates go back to 0 or near 0, given what type of environment that we've created with the Federal Reserve and monetary policy globally. So that might not be a bad trade as well. I'm just waiting on it. Nothing crazy in it, but if it hits, then obviously I'll take profit, and it was worth the time being in the market holding those positions. Outside of that, the VIX, I think that's the one that still has plenty of room to unwind. We're looking at it today. I would love to see this thing unwind sooner rather than later, but September, October seems like the historical pattern of 6 months after the spike breaking out is where we start to see the major move. But we are getting closer and closer to the end of this, and pretty soon we're going to be seeing something very similar to this, a spike out of this triangle pattern that we've seen historically for years. So that's kind of where my base case is for things that I think I'm bullish on. Nothing's really changed. I'm still bearish on the market overall, but there are things out there where there could be really a high reward for low risk because people are just positioned completely in the worst possible way, which is long some of these stocks that are probably going to be the fastest to ride down, whether it's clearinghouses or just absolute panic.
Just in time for retail to pile on in.
Yep.
What do you know? Never seen that play out before. All right. Anything else that you have to say about state of the market, any of this data? I think I've said my piece. The writing is on the wall. you know,
Yeah.
I'm still expecting some pain here in the coming months but I'm not trying to time this thing. I have my positions. I'm holding my positions. I'm just going to let it play out. I've seen some shit go down over the years. So I'm just chilling, enjoying my summer, trying to get more and more cash on hand to buy some of these opportunities and keeping an eye on that real estate market.
Yeah. I'm scared about this month. I'm scared. I'm definitely not bullish by any means on September and October. Uh, I don't think that's that far off to remain bearish, but I'm kind of worried about July into August. Primarily like towards the end of August. There's just a lot of things that I think could potentially go wrong, and we might be at the beginning of it. So, a 50-point down day today. What happens if we get another 50-point down day tomorrow? And then we have the weekend, Monday morning opens. You don't know where it's going to open, right? It really depends on a lot of these earnings too. We're in a very bad place because I do think,
Did you see what JP Morgan said?
yeah, fuck that statement that they put out, because that's the dumbest thing I've ever heard. I hope you're
Which
talking about
statement
the
are you
crypto one.
referring to?
The
About
crypto
how
one.
it's going to rebound in August?
Yeah, it's the worst time it's probably going to perform.
Talk
I'll be
about
honest with you.
them trying to sucker people in and then just dump on their heads. Like, that
Absolutely.
is just, I mean, it didn't impact the market at all. Like, it's not like we saw like a spike in volume. If anything, it's starting to get worse, but like, fuck off with that kind of a thing. Anyway,
Absolutely. Yeah, and tomorrow's a big day. We got the bank earnings. I mean, next week's got a lot of earnings. You got some, top 7 stocks that are going to be reporting, and we've known that the past 2 quarters have not been good. That's no surprise. So if bad news, I mean, that's what news we got today is good news long term, but it's bad news for the market in the short term. If bad news remains to be bad news from here until like say August 20th or something like that, good luck. You're going to probably see a lot of stocks just absolutely dunk on the market. And, it's going to be interesting how we see this in the media as well, because I do think part of this has to play with some of the instability we do have in what November is going to look like. Um, it seems like there's a lot of just absolute chaos in terms of we don't necessarily think that he could beat Trump, but at the same time, he's not stepping down. The market can decide, price things in ahead of time. I mean, they always do that, right? So if they are looking at, say, we end up with a Biden presidency, or maybe Trump's going to win because Biden won't step down, we could see a volatile reaction in the market. It doesn't have to be massive. It could be 10-15%, very possible in a short period of time. We've definitely built the conditions for the market in that, with volatility being so suppressed, the VIX crash that's happened for so long, that it could go off any day, and we can see 200 points down in the S&P when we're least expecting it. That could be Monday morning. Who knows? We really don't know. But I do think that the conditions are right, and that could, no president has ever won an election with the economy in the shitter. It is what it is. So the markets can kind of decide in these next few months what could happen in November. Just something to be cautious of, because I do think that we did see distribution extremely well for these past 3 weeks. Retail is all in, and JP Morgan seems like they want more retail in for the crypto market, but I don't think there is a safe ship when it comes to any of those ones that have just been overbought for the past year and a half. There's a reason why it's been overbought for a year and a half. At some point, someone's going to have to sell to a bigger idiot. So, is what it is.
don't be that bigger idiot. Okay, that is how we're going to wrap it up for this week. No show tomorrow. We will be back next week, however, so make sure to check us out. Hit that like button, subscribe, turn on notifications. All of those good things are appreciated. Hope everyone has a great rest of your week. Stay safe in the markets. Have fun this weekend, and we'll see you next time.
Take care, everyone.